Hello and welcome to this video on interpreting financial statements, focusing on the statement of comprehensive income. So in this video we're going to look at the design and the usefulness of a statement of comprehensive income. So in this video we're talking about financial statements and how they might be useful, how they might provide information to various stakeholders on how a company has performed over a period of time. There are two key financial statements which usually record the trading activities of a business, normally over a period of 1 year, and these are known as the Statement of Comprehensive Income and the Statement of Financial Position. Now, the Statement of Comprehensive Income summarizes the revenue and costs over a period of time and shows us whether the business has made a profit or a loss. Now, it can be very useful because we can use it to assess the financial performance of the business through looking at profit margins. We can also look at the cost structure of the business. What is more significant, the cost of sales, the direct variable costs, or the expenses, the overheads or fixed costs? We can also look at the profit quality by comparing the level of profit at each different stage, and then we can also look at profit utilization. Once we have profit after tax, what do we use that for? Dividends, or do we keep it, retain it within the business's retained earnings? So a reminder of the Statement of Comprehensive Income. The top line, we call it, sometimes the top line is the turnover, sales revenue. Then we subtract off the cost of sales to give us what we call the gross profit. So really the profit close to contribution that we're getting directly from the sale of those particular products. Then we look at expenses, so costs not related directly to output, to give us the operating profit from operating this business as a whole, just from the business activities. What level of profit are we receiving? Then we deduct any interest charges or add on any interest we have on cash, any exceptional items, and we get our profit for the year, or sometimes known as net profit. Once we deduct off any tax, we get for the profit for the year after tax, which is sometimes called the bottom line. And we need to decide how much of this is paid out in dividends and how much is left in the business through retained profit. So here's an example of a simple statement of comprehensive income. And we might use it in the following way. Firstly, we might look at gross profit, and this indicates how well the direct costs have been controlled. So how well is revenue, the money we received from selling items, cover the direct costs of making those items? We can then look at operating profit, and that shows us how well total costs as a whole have been controlled. And based on this figure and the gross profit, we can start to look at the cost structure. What's more significant, the cost of sales or the expenses? What can we learn about the business from this information? Net profit before tax is normally the one we use to compare against any profit targets or objectives that the business might have, and we would compare this over time. A business then has to decide how it will utilize the net profit after tax, how much will be retained, how much will be paid out to shareholders in dividends. A reminder here that any figures with brackets indicates a cost that must be deducted to get to the next level. So why are statements of comprehensive income useful, and what are the limitations? Well, they're useful because they give us details of a business's revenue, indicating whether or not it's grown. It can help us to assess profitability by looking at gross profit, operating profit, and net profit, and the associated margins. It provides us details about the costs and how successful managers have been in controlling those different layers of cost. However, we need to use this alongside the statement of financial position and other financial data to get a full picture of the finances of the business. And again, the analysis we perform should be over a number of years, or should be looking against similar businesses in the same industry, so we can make some sort of comparison. A judgment in isolation is not much of a judgment at all. So who is interested in looking at a statement of comprehensive income? Well, certainly the shareholders are looking at how much profit their business is making and how much profit therefore can be distributed to them in dividends. Competitors might be looking at the level of profitability and possibly the amount of profit to benchmark themselves. Is the business more efficient? Does it add more value? and what can they learn as competitors from that. The government will be interested in calculating how much tax the business should pay. Employees will be interested to see how secure the business is in terms of profit or loss. For example, if bonuses are based on profit, has this been achieved? Or if the business is going to lose money, will their jobs be safe? So in this video, we've looked at the design of the Statement of Comprehensive Income and how different stakeholders might find it useful. That's it. Thank you very much for listening.